Imagine this. You're 45 years old and you've just received a shocking letter in the mail you've saved enough to retire, but only if you stop eating avocado toast forever. Scary, right? But what if I told you it doesn't have to be this way? What if retiring early doesn't have to mean giving up the things you love? What if you could design a life where money works for you, and not the other way around? Where you could retire early, travel the world, or just enjoy the simple things, all while still indulging in the occasional avocado toast. Sounds like a dream? Stick around and I'll show you how. Today we're talking about long-term financial planning, your blueprint for achieving not just wealth, but freedom, security, and a little peace of mind. Now don't roll your eyes. I know the words long-term and planning sound like your least favorite group project, but trust me, this is the project that defines your life. Let's dive in. Look, we all have dreams. Maybe it's early retirement on a beach somewhere or finally starting that business you've always talked about. But here's the thing, a dream without a plan is just a wish. So let's turn those dreams into a tangible blueprint. The first step, defining what you actually want your life to look like in 10, 20, even 30 years. I'm serious. Grab a pen and paper or open up that notes app on your phone and start writing. Don't just think it, ink it. Do you want to travel? Where to? What does your dream house look like? Big or small, city or country? What kind of work do you see yourself doing or not doing? Do you want to be your own boss, work remotely from a beach, or maybe even retire early? Don't hold back, be specific. The more detailed you are, the more real it becomes. This isn't just some feel-good exercise, though it does feel pretty good to imagine your dream life. This is about setting your compass. Once you know your destination, you can chart the course to get there. Remember that goal in your head I mentioned earlier? The one that's just a fantasy? Well, this right here, this is how you turn that fantasy into a plan. A goal on paper is a blueprint, a roadmap to your future. Don't worry about making it perfect. This is your vision, and it can evolve over time. The important thing is to get it out of your head and onto paper. Trust me, this simple act of writing down your goals is the first step towards actually achieving them. Okay, let's talk about something no one likes to think about, emergencies. Yeah, not as fun as planning that dream vacation, but trust me, this is important. Imagine this. Your car breaks down, you lose your job, or your dog eats something it shouldn't have and needs an expensive trip to the vet. These things happen, and they usually happen when we least expect them. That's where your emergency fund comes in. Think of it like your financial seatbelt. You don't want to get into a car accident, but you buckle up just in case. An emergency fund is your financial safety net, your peace of mind fund. It's there to protect you from life's unexpected curveballs and keep you from going into debt when those curveballs come flying. So how much do you need in this financial fortress? Aim for 3 to 6 months of your essential expenses. And by essential, I mean rent or mortgage payments, utilities, groceries, the things you absolutely need to survive. Now I know what you're thinking, Graham, that sounds like a lot of money. And you're right, it can seem daunting, especially when you're just starting out. But remember, you don't have to do it all at once. Start small. Even $500 is a great first milestone. Then make it a habit to contribute to your emergency fund regularly, even if it's just a little bit each month. Think of it like this. Every dollar you save is a dollar that can't be used against you when life throws you a curveball. It's about having your back, giving yourself that financial cushion to weather the storm. And trust me, knowing you have that safety net will give you a sense of security and freedom that's priceless. It's like having a financial bodyguard, always there to protect you. Chapter 3. The magic of compound interest turning pennies into passive income. Alright, now let's talk about the fun part, investing. This is where your money goes to work for you, like your own personal money-making machine. See, investing is how you turn those hard-earned dollars into, dare I say it, generational wealth. You've probably heard of compound interest, and no, it's not some boring financial jargon. It's magic, pure magic. It's the snowball effect of earning interest on your interest, and over time, it can turn those small, consistent investments into a massive snowball of wealth. Think of it like this. You invest $100 today. It earns a 7% return, and now you have $107. Not bad, right? But here's where the magic happens. The next year, you're earning 7% on $107, not just the original 100. See how that snowball starts to grow? The earlier you start, the more time your money has to compound to work its magic. It's like planting a tree. The best time to plant a tree was 20 years ago, but the second best time is today. Now I know what you're thinking. Investing is risky, or I don't know anything about the stock market. And you know what? That's okay. You don't need to be a Wall Street whiz to start investing. There are tons of resources available, from robo-advisors to target date funds, that make investing simple and accessible for everyone, even if you're starting with just a few bucks. The key is to start small, diversify your investments, and most importantly, be patient. Remember, investing is a marathon, not a sprint. It's about slow and steady growth over time. Chapter 4. Don't put all your eggs in one basket. Diversification is key. Let's talk about eggs specifically, not putting all your eggs in one basket. The same goes for your investments. Diversification is key to building a strong and resilient financial portfolio. Think of it like this. You wouldn't bet your entire life savings on a single horse race, would you? Of course not. You'd spread your bets, hedge your risks. Investing is the same way. Diversifying means spreading your investments across different asset classes, like stocks, bonds, real estate, and even starting a small side hustle. Each asset class has its own risk and reward profile, and by diversifying, you're essentially creating a financial safety net. When one asset class is down, another might be up, which helps to balance out your portfolio and reduce your overall risk. It's like having a diversified team of superheroes protecting your wealth. Stocks are like the high-growth, high-risk members of your team. They have the potential for big returns, but they can also be volatile. Bonds are like the steady, reliable members, providing income and stability to your portfolio. And then, you have real estate, the tangible asset that can provide both income and appreciation over time. Don't forget about the power of a side hustle. Whether it's freelancing, selling handmade goods online, or even driving for a ride-sharing service, a side hustle can provide an additional stream of income and diversify your earnings, further strengthening your financial foundation. Remember, diversification is not about avoiding risk altogether, it's about managing risk effectively. Chapter 5. Your Financial Plan, a living, breathing guide to your future. Congratulations! You've defined your goals, built your emergency fund, dipped your toes into the world of investing, and diversified like a pro. You're well on your way to achieving financial freedom. But here's the thing about financial plans. They're not set in stone. In fact, they shouldn't be. Life is fluid, your income changes, your goals evolve, and your financial plan needs to be flexible enough to adapt with you. Think of your financial plan as a living, breathing document, a roadmap that guides you towards your goals, but a roadmap that you can adjust and refine along the way. It's not a one-time task, but an ongoing process. Review your financial plan at least once a year, or whenever you experience a major life change, like a new job, a marriage, or a new addition to the family. As your income grows, so should your savings and investment contributions. Did you get a raise? Awesome. Increase your 401k contributions, or max out that Roth IRA. Did you pay off a credit card? Fantastic. Redirect that payment towards your investments or that dream vacation fund you started. Life is full of surprises, and your financial plan should be agile enough to roll with the punches. Remember, this is about taking control of your finances, not letting them control you. It's about making your money work for you so you can live the life you want, avocado toast and all. And hey, if things get complicated, don't be afraid to seek help from a financial advisor. Think of it like hiring a personal trainer for your money. They can help you create a personalized plan, answer your questions, and provide guidance along the way. Remember, knowledge is power, and when it comes to your finances, there's no such thing as too much knowledge. Your future starts today. Long-term financial planning isn't just about numbers, it's about designing the life you want and taking control of your destiny. It's about having the freedom to pursue your passions, secure your future, and enjoy the journey along the way. Imagine waking up 10 years from now and realizing you made the right choices today. You're financially secure, living your dream life, and yes, still enjoying that avocado toast without a worry in the world. That's not a fantasy, it's your future, waiting for you to claim it. Start now, start small, just start. Because every step you take today, no matter how small, brings you closer to the life you've always dreamed of. And trust me, your future self will thank you. And hey, if that future self is rich enough to buy a yacht, invite me, okay? If this inspired you, don't forget to like, subscribe, and share this with someone who needs to hear it. Let's grow wealth together.